The Taxpert Basis Period Reform App 2023 is the third version of an app I produced to deal with accounting dates and basis periods, but has become hugely more significant following the confirmation that this tax year, 23-24, is the year in which we have to move on to a 5th April year end or basis period end for all sole traders and all partnerships. This has got nothing to do with making tax digital, perhaps it has, but there is no delay on this. It's happening now. And what this app does is enable you to input existing accounting dates. Up here, I've put in 30th of April 22, profit figures going all the way through to 27-28. And it will then determine what the calculations of basis period taxable profit and tax liabilities will be in the event of certain assumptions. Now, let's start with an accounting date of 5th April 23, so there's no change. And what we can see down here is the payments on account, 31st of Jan 24, final payment for 22-3, first payment on account for 23-4, etc. And if I just focus on the 31st of Jan payments, 2545, then 2336, then 2527, 2527, etc. So I've built in the tax and NI liabilities, class 4. Now, in this case, with the 5th April year end, no changes. There is nothing really to talk about. However, if I were to change date to, say, 30th of April 23, so I put in a different accounting date, which is completely counterintuitive, then if I look at the tax cash flows, it's very interesting because the old date and the new date are next to each other here. For 31st of Jan 04, there's no difference, but for 31st of Jan 25, there would in fact be a refund of 5,246. All right, payback time is a year later, when you'd have to pay 10,000 odd instead of 2,527. And then up here, we can work out what's going on. Why do we get that payback? And the answer is that with that change of date, the calculation for 23-24, which is the one that gives rise to that 31st of Jan 2005, that calculation will go down, bizarrely, to 7,640. Now, the reason for that we'll find in the workings, and in a demo like this, you're not going to see, I'm not going to see what's going on, but I know what's going on. It's because of the old change of accounting date rules and what would happen for 23-24 when we don't, in fact, have an accounting date, and we'll have to go to a basis period of 5th April 24. It'll generate overlap relief, which will also be used up in that same year. If I go back, however, and change that now, let's say not a change of accounting date, and instead change the initial date to 30th of April 22. So this is a totally different scenario, but with the same profit figures. I'm assuming here that your client has a 30th of April year end at the moment with no change of accounting date. What this shows is how the basis periods change to 5th April and how that affects the payments on account. Again, 31st of Jan 25, we go from a 2,500 a year to 4,767 as the final payment, and then dropping back down to 3,335. Now, this is a function of the catching up as we go to 5th April. I haven't put in any overlap relief for this one yet, but we can see here the spreading over 5 years of the excess profits that are brought in 23-24. But if there was overlap relief, and you'd have 11 months of overlap relief, so let's say we've got, I don't know, 25,000 of overlap relief, that makes a big difference. And in that case, we would have more or less consistent payments on account throughout the years under review. But this spread under the old date and the new date is itself flexible, and I can decide at any point to bring in the whole amount, or to bring in any amount I like. If I change that to 1,500, say, in that year, then it automatically respreads the rest of it in accordance with the legislation. What else can I show you? Let's have a look at this cessation. This is new in this version. I haven't had it in a previous version. But if we decide we've had enough and we're going to cease the sole trade or partnership, possibly by incorporating, and I choose a cessation date of 5th April 24, a lot of the data disappears. It becomes a lot simpler, and we can see what the cessation liabilities would be and how much the payments on account and the final payments would be on the basis of that cessation. Again, you can change the cessation date by changing what is in that field within reason. So quite a lot that we can play around with here. It is all pretty complicated. The other tabs or worksheets that I've got built in, let's actually stop it being a cessation, go back to a change of accounting date. Oh, and you've got my usual trick of, are you Scottish or not? Yes or no. Are you of state pension age or not? And if there are losses, what is the tax value of the losses carried forward? But on this tab, tax and national insurance, for each of the 8 years under consideration, I've input the current and then carried forward for the later years, the rates of national insurance and also tax, and that determines these figures of tax and class 4. So that's a guesstimate, a good guesstimate of the amount of tax and class 4 that feeds into the payments on account. And then you've got more detail in these workings of how the basis periods and the overlap relief and the spread, all horribly complicated, how all of that works. And that final tab, just from the Revenue Business Income Manual, sets out the change of accounting date rules that apply from 23-24 onwards, and that all feeds in to the calculations that go into this. Looks horribly complicated, but very simple and easy to use. And then you need to work out what the results are and advise clients. There will be clients who counterintuitively should be advised to change accounting date. I'll just go back to that. Suppose you were on 5th April 22. Should we change accounting date, let's say, to 30th of April 23? And if we do that, actually that makes no difference. But if I were to change to, I think if I had it as 5th April 23, and I need to go back and remind myself what the different rules are, that was the one that did make quite a sig. Oh, I know, it's because I've got that overlap relief in there. I should have got rid of that. So I could go back now to 5th April 22 as my last 5th April date. And then if I were to decide instead to go to 30th of April 23, or let's actually change it, because I don't think I did that earlier, change it to 30th of April 22, because I know that that's going to be quite an interesting change. We do get some quite significant differences. Actually, we don't get any differences, so it's not that interesting. It's one of the ones I showed earlier, but you can see playing around with this all is going to make for some interesting calculations, which quite frankly, nobody would do without this sort of tool to help them.